and welcome to the Retail Week, our look at the biggest stories in retail over the last 7 days. I'm Grace Bowden, reporter for Retail Week, and I'm joined by our executive editor, George McDonald, and our head of content, Luke Tugby. So, there have been a lot of big tactical moves this week by businesses who are making big bets, and the theme that we've noticed is that there are strategies that are being divided into two pretty different camps. So on one hand, you've got Mothercare and you have Gap, both of whom are responding to market pressures and tough businesses' performances by cutting costs and closing stores. On the other hand, you have Majestic Wine and Sainsbury's, who are ploughing investment into their proposition and their people. Our question is, in tough times, which tactic bears more fruit, cutting costs or ploughing investment? What do you guys think?
It's a difficult conundrum for any business to tackle, really, but I think if you look back at the last recession, I think John Lewis was one of the businesses that actually took the investment strategy and reaped the rewards at the end of it. Yes, it's struggling a bit now, but a lot of that is because it's, once again, investing, and that's had an impact on the bottom line. But I think for PLCs it's tougher, and if you look at Majestic today, I spoke to Rowan a few minutes ago, and he takes a similar point of view to John Lewis. He thinks there's more opportunities to invest in a downturn, and his quote, which I quite liked, was, "When all the lambs are running over the cliff edge, turn around and run against them," which I think sums it up. But the problem that a PLC has is that so much of performance and what the market thinks of you is driven by a quarterly like-for-like performance. And even though Majestic warned the market, or told the market in April, look, we are going to invest in new customer acquisition and customer retention, both of which are actually bearing fruit if you read the results, their share price has dropped 17% this morning. And that is the trouble that PLCs have. They have to look at that share price and returns to shareholders, and ultimately I think that is what detracts a lot of businesses from investing in the way that they maybe should.
Yeah, I think cost reduction, cost cutting is definitely a really important part of the equation, though, as well. You look at businesses like Asda or the discounters. Everyday low cost is what enables them to give shoppers everyday low prices, which is key to their success. And I think sometimes it's quite easy to say, yes, we need to invest here, and it might be quite true, but equally at the same time, if you're not bringing costs down appropriately somewhere else, unless you're doing really, really well, which not that many retailers are at the moment, you can't do. And it becomes a bit blurry as well, in that a lot of the companies that are becoming smaller, it's actually costing them money to do so. They're having to raise new equity or take on extra debt to pay things like redundancies and to get out of stores. And in future years, maybe that will be regarded as investment. But yeah, it's actually, to bring your costs down is quite an expensive process.
I take that point about when you refer to Asda and the discounters. Yes, keeping costs low and under control helps you deliver low prices. But in the case of Asda, ultimately, cutting costs didn't lead to success. It led to its failure, really, for 2 or 3 years, because it stripped too much out of the shop floor, and that had a knock-on impact
although its attention to costs was very long-standing, it wasn't a new thing. I guess the other side of it too, I would say, is you look at someone like John Lewis, who is investing, but equally they've taken quite a lot of costs out as well. Sadly, they have cut jobs, so I don't think it's always an either-or question.
I think there is definitely a thing of a case-by-case basis, isn't it? There are some businesses you hear about them cutting more costs and things like that, and you feel like you've heard them talk about it quarter after quarter, interim result, prelim after prelim, and you don't see it bearing fruit. Whereas with somebody like a business like Gap, for example, not to be callous, but when their CEO, Art Peck, announced yesterday that they would be closing hundreds of stores, including potentially flagships, there was a sense of the people in the office when the story was being written of it's sort of high time. That's a decision that needs to be made. That's a business that's been struggling for a really long time, and something needs to be done. The question is, how do you find the balance between the two? So how do you, on one hand, not invest so much in your big blue sky thinking dream idea that you're just throwing good money after bad? On the other hand, how do you not manage your costs so tightly that you actually end up bleeding yourself dry? It feels like it's quite a fine line to walk.
Well, they're not everyone's favourite retailer, but you look at somebody like WH Smith, Now, it always seems to find a few more cost savings in there. Some people say yes, and you can see that in some of the stores. The carpets obviously have become a sort of social media laughing stock. However, though, they do also undertake a lot of good initiatives. They try out a lot of good new things, and it tends to be often at quite a detailed level of execution. But despite the fact that they are not everyone's cup of tea, you look back over the years and they have been a very consistent, strong performer, without necessarily having to come out and say, oh, we need to pump £1 billion into investing over here.
Go consistent. I might contest strong. How many quarters in a row I can hear profits up, sales down, and go another strong performance.
But that's what I mean.
Absolutely.
The profits are going up, and it's not just because of cost cutting; it's because of effective retailing too.
And it comes back to the one point I would add to that, and I'm going to sound like either a PR or a retail exec here, but it genuinely is thinking about what the customer wants.
Yeah.
And actually, WH Smith is delivering really well in travel because it is delivering what the customer wants. Quite a quick and easy but pleasant shopping experience. They want to go in, pick up a book or a pair of headphones, whatever it might be.
Which WH Smiths have you been going to? Sorry,
the travel one.
It's not my experience.
You go to London Bridge. They've got a bookstore one side and a Tech Express the other, and they are both fantastic stores. Very well kitted out, like chalk and cheese to a high street store.
Okay.
But actually, do people want as much from a high street store? It's they don't want to go in and browse headphones and look for a book. Ultimately, they're probably just going in for a water or to pick up a quick magazine where they know what they want before they go in, or go to the post office.
Yeah. I think the other thing about investing, and fundamentally investing in your business is a good thing, but sometimes you just think that actually the investment should have been done years ago. It was actually a lack of investment, and then suddenly you describe that lack of investment as an investment. All that's happening is that it's coming at one time. Is it more than it would otherwise have cost, less, or the same?
It has a Fraser effect, perhaps. Yeah. So with that in mind, there are four businesses that we've discussed in terms of the ones that have made these big plans this week. So Mothercare moving into a more franchise model and defending the CVA as well. Gap planning to close hundreds of stores. Majestic warning that profits and sales would not be as strong because of the investment they're making. And then Selly with Sainsbury's as well. Of those four businesses and those two tactics of cutting costs versus ploughing investment in, who do you think is going to be the most successful over, let's say, the next 5 years? Are they all going to be around in 5 years?
I'm not sure all of them will. Gap in the UK, I have reservations about. I think ultimately they might just have an outlet presence, which seemed to be doing fairly well for them. High Street, not too sure. Mothercare, again, really couldn't call. It's a tough old job that Mark's got on there. I like what they're trying to do in terms of a franchise type operation, but I think that's going to take a lot of time and effort to bring that in. Sainsbury's will undoubtedly be here. In what form, who knows, because we don't know what's going to happen with the Asda merger, whether that will happen or not. It's looking increasingly unlikely given what the CMA are saying. And Majestic as well, I think will always have a place on the high street, and I think what it's doing now, reaching out to customers who wouldn't normally have shopped at Majestic and actually trying to take a few customers off the big four and say, look, yes, you can buy an entry-level wine there for £4 or £5, or you can sign up to our new what's called a concierge service where they will deliver a box of wine to your home every 3 or 4 months without any effort. All you have to do is sign up once and you receive it on that basis. I think those kind of moves that they are investing in will ultimately bear fruit and make sure that they thrive longer term, even if investors don't like it in the short term.
Yeah. And George, what do you think? All those businesses got a future on the high street in the next few years?
Yeah, I mean, Mothercare is just at the start of trying to turn itself around after the CVA, but it's been sort of plodding along for years, not doing that well. I mean, why would someone want a Mothercare franchise? I don't think at the moment the answer to that is clear.
No.
And so then you've got to wonder, out of all of them, I think
that's the most vulnerable one.
Yes.
Yeah. Okay, all right. Well, I think we'll leave it there. Thank you so much for your thoughts, guys. Really good and interesting as always. We have got Black Friday coming up, and then next week Cyber Monday. So follow us along. We'll be telling you all the news on that as it happens, and no doubt some sort of follow-up analysis as well. Thank you very much for joining us, and we look forward to seeing you again next week.